Hi, my name is Chester Johnson. I'm the co-founder of the Stock Boss app and StockTeamUp.com. Our goal today is to really give people some financial literacy. And so Jeff's here and he's going to talk to us about technical analysis and technical charting. Jeff, welcome back. Thank you.
Thanks, Chester. Appreciate it. So there's a lot of resources out there. I'll introduce what technical analysis is, but I'm not going to spend a long time on that part of it. And there's people who have done some amazing videos and stuff like that. There's a lot of education out there about technical analysis. So I'll really speak to technical analysis as I use it as a real life, person who manages their own money and trades and invests. So technical analysis, very simply put, for anyone who's really, really new to this, is simply the use of charts or the price, the closing, the opening prices of stocks to make their decisions, versus fundamental investors who use company performance, right? So even if you are very, very new to this, public companies report their financial results. You turn on the news, you probably see so-and-so reported earnings. That's all fundamental investing. It has nothing to do with charts, it has nothing to do with technical analysis. Folks who follow technical analysis or consider themselves technicians, they're studying charts. And I think if you've gotten to this video, you've probably seen a stock chart or heard about it or seen it on TV. So for those of us who use primarily technical analysis, we're using those charts. Now, the real question gets into how do you use those charts and what's meaningful and what's not? Because if you see a chart, you might see all kinds of squiggly lines and, colorful graphics and things like that. So deciphering those is you could spend a long time on that. We're going to talk for a few minutes here, so we're beyond that. But generally, to simplify things, those stock charts show the actual performance of stock price. So what I like to think of it as is the left-hand side of the chart, and then usually the smaller right-hand side of the chart, which is the future. So if you're looking at a chart, the left-hand side is all of that real price data. And those are the facts: where stocks opened, where stocks closed, where price was. And on the right-hand side of the chart, it's sometimes very skinny, but it's where price is going to go. And you try and use the left-hand side of the chart to make those decisions about the right-hand side of the chart. Anyone with a little bit of study can be a master of the left side of the chart. Chester, you and I used to run a local stock meetup group, and we used to say that almost every session. Anyone can master where price was. And if you see most of these people pushing YouTube videos, they're going to show you these charts and they're going to say, look, price was up here, and then I said it was going to go down, and then look, price went down, and then price went down, and then price was down, and I said it was going to go up. That's easy, right? Anyone with a little bit of study in a chart can be a master of the left side. So the real idea is trying to become a master of the right-hand side of the chart, which is really taking that information and predicting, hopefully more than half of the time, what's going to happen in the future. And that's not magic. Those are informed analysis or informed decisions and analysis that help you make those decisions. Nobody gets it right 100% of the time. That's a rule. Somebody might get it right 90% of the time, or 80% of the time, or 50% of the time. But the goal is to get it right more often than not, and really try and look out in the future. If you're following technical analysis, and try and figure out where price is going to go more often than not on that right-hand side of the chart. One other thing I'll say, Chester, is if you're investing in the market and you're considering yourself a trader or investor, and you're really into technical analysis, we're still human beings, and it's very easy to say, to kind of bring in the human emotion or bring in other types of investing, like fundamental investing, and say, well, how can Tesla go up anymore? It's already doubled and tripled and quadrupled, and they've only sold so many vehicles. How can Tesla be worth more than all of the next 5 car makers combined, right? Like, how could that be? How could price of Tesla continue to go up? So that's somebody who wants to be a technical investor, but who's bringing in fundamental information. And that's not all bad. It might make you a more well-rounded investor, but it's certainly going to confuse you, right? Because if you make a thesis based on the chart and consider yourself a technician, But then you start doubting yourself because you start saying, well, wait a minute, how can Tesla be worth more than all these other car companies combined? Then you're going to confuse yourself. And I'm not to say either one's right or wrong, but you're just bringing in a lot more information, and to me, you're bringing in sort of a human emotion and thought process to it. Make it very hard to make those decisions. So if you're struggling with those, you're like a lot of people who are trying to learn and trade the markets. So not to say again that you shouldn't be thinking that way. There are some investment methodologies out there who try and blend both, right? So they bring in fundamental analysis and technical analysis to rationalize that. And I don't think that that's all bad. I personally think that it's hard to just use one exclusively, but I do lean more towards being a technician myself. But I like to know the symbol on the chart. I look at the charts, but I like to know what those companies are and what industries they're in. I don't care about price to earnings ratio or any of that fundamental information, but I do at least like to know the stocks that I'm investing in and what they do and a little bit about their place in the market. So that's how I use technical analysis and a little bit of fundamental analysis. Chester, what are your thoughts? I know we've looked at a lot of charts over the years together.
Oh yeah, and I'll say, from my experience, being a hedge fund portfolio manager for a bit, I did a lot of algo trading with standard technical analysis, billions of calculations, and what I learned was don't just go blindly into something that someone told you is the way to go. Do your own research. A standard XYZ trading pattern, I did it over and over again. It's like, it doesn't actually work out the way you expected. So, take the opportunity to keep learning, because when you learn and you understand the market, you can get a better appreciation of when to do the charting and when to use the right tools for it. But if you just blindly go with some strategy without understanding it, I just found that it doesn't usually work out.
We had an old friend who, I don't think it was original to him, but it's been passed along to us. But we've heard an old friend of ours say, in his experience, everything works until it doesn't, right? So if you have a methodology, you think, wow, this worked 3 times in a row. I'm just going to keep doing this and get rich. It might work 3 more times. It might work 30 more times. It might work 300 more times, but eventually it's going to stop working. So you have to stay nimble, and you have to kind of adjust. It's good to have that core set of tools though, and learning technical analysis and price action is a very good tool, I think, to have. And if you're on that journey, continue to seek out that information and give us feedback on what you found with technical analysis or specific questions that you have, and we'll talk more about it.
Awesome. Jeff, thank you again for joining me, and for everyone watching, please like and subscribe, and appreciate it. I hope to see you again. Thanks, Jeff.
All right, thanks, Chester.